Make it make sense. Tax Form 982 and Forgiven Debt. Hey everyone, welcome back to Make It Make Sense. Today we're tackling something that sounds complicated but can save you a ton of money. Tax Form 982. Let's set the stage. Imagine this. You're drowning in debt. Maybe your house was foreclosed, or your lender forgave a chunk of your mortgage. Sounds like a bit of relief, right? Well, the IRS has a surprise for you. They usually consider forgiven debt as taxable income. That means you could be hit with a big tax bill for money you never actually saw. Crazy, right? But don't panic. This is where Form 982 swoops in to save the day. It lets you legally exclude certain types of canceled debt from being taxed. Here's how it works and when you'd use it. When to use Form 982 foreclosure or loan modifications. If part of your mortgage debt was forgiven or your home was foreclosed on, Form 982 might help you avoid paying taxes on that forgiven amount. Bankruptcy. If the debt was canceled because of bankruptcy, you can use this form to exclude it from your income. Insolvency. Were your debts greater than your assets when the debt was canceled? If yes, you might qualify to exclude some or all of that forgiven debt. Primary home mortgage debt. If the forgiven debt was tied to your primary residence, there's a special rule called Qualified Principal Residence Indebtedness, or QPRI, that lets you exclude it. How to fill it out here are the basics. Part 1. Reasons for exclusion. Check the box that fits your situation. For example, bankruptcy? Check box 1A. Insolvent? Box 1B. Was it your primary home? Box 1E. Part 2. Excluded debt amount. Here you'll write down the amount of canceled debt that you're excluding from your taxable income. Part 3. Tax attribute reductions. This section is a bit technical. Basically, if you exclude canceled debt, the IRS may reduce certain future tax benefits, like losses you can carry forward. You'll fill this out if it applies. Let's break it down with an example. Say you owed $200,000 on your mortgage. Your house was foreclosed and sold for $150,000. The lender forgives the remaining $50,000. Normally, the IRS would treat that $50,000 as income, and you'd owe taxes on it. But if you were insolvent, meaning your debts exceeded your assets, you can file Form 982 to exclude that $50,000 from your income. That's huge. The key takeaway. If you've received a 1099-C form from your lender, don't ignore it. That's the signal that some of your debt was forgiven. Form 982 could help you avoid an unexpected tax bill, but only if you qualify. So, whether you've dealt with a foreclosure, loan modification, or bankruptcy, this form could be a game changer. If you're unsure, reach out to a tax professional for help. Better safe than sorry. That's it for today's episode of Make It Make Sense. Don't forget to like, comment, and subscribe for more tips on breaking down complicated legal and financial topics. See you next time.